Mortgage rates have dropped nearly 0.2% since last week's Fed meeting and are back below 7%. Housing inventory had another small increase this week, and we are still just over 500,000 homes for sale in the entire country. Inventory has slowly been growing as rates have been rising, but we still have not seen any meaningful increase in the number of people listing their existing homes for sale. We're covering all this and more on today's weekly update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, my favorite part, the top 10 ranked hottest and coolest both cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is March 26th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Now, I usually start with some piece of market news. I couldn't find anything worth sharing this week, so I'm not going to waste your time. I'm going to jump straight in to the national housing data, starting with national housing inventory. This week, we had another increase of just 5,599 homes for sale in the U.S., which gets us up to 512,759 homes available on the market for you to buy in the entire country. And so far this year, it's been looking more and more likely every week that we actually already had our yearly inventory bottom back here on February 16th. So barring any huge drop in mortgage rates that brings a flood of demand, I think there's a very good chance we've seen the bottom, which would actually make this the closest we've been to a normal market since COVID. So just one hopeful sign of us getting back to a normal market. Last year, the inventory bottom didn't happen until sometime in April. So if it happens in February this year, that would be great news. Next up, we're looking at the number of new listings. So the dark red line is this year, the bright red line is last year, and this week there were 10,395 more homes listed than the corresponding week last year. That's this gap you see here. Although it's definitely nothing to get excited about because as you can see, we're pretty much just tracking exactly with 2022 numbers. And if you can remember, 2022 was not a great time for housing inventory. So if we're going to get out of this inventory shortage, we're going to need a lot more people listing their homes than this. The one positive thing we have working for inventory right now is that rates have been remaining high around 7%, which is causing a higher days on market, which is giving inventory time to stack up. So inventory is growing just very slowly. So we're very, very slowly headed in the right direction. But hopefully this spring, more people are going to start listing their homes. Okay, and then the last thing we cover nationally is the percentage of homes having price decreases. Every year, it's normal for 1/3 of homes to take a price cut before they sell. And looking at the national chart, this week we're at 31.4% of homes having a price decrease. Now, something you need to know is typically the number of homes having a price decrease every week will start to go up around now. So what you're seeing here with this curve up, as you can see back here, this is totally normal. Last year, we got as high as 39.2%. The year before, we got as high as 43.2%. And all we'll be looking at for the rest of the year is looking for aggressive swings in either direction, which will be totally dependent on whatever mortgage rates do. So don't be surprised, this number should be going up every week, probably until November. For now, this is just a sign of a totally normal market. Okay, moving on to mortgage rates, we got as high as a 7.11. That was just before the Fed meeting. Obviously, the Fed came out. They're not cutting rates yet, but they're also not raising rates. So that gave the bond market the confidence that they needed to start dropping rates again. We went all the way from a 7.11 to a 6.91, so definitely a big drop. Yesterday, we came up a little to a 6.92, and I believe this week we have the CPI inflation data coming out. I believe it's this week. So, of course, that will have a big impact short term. If the inflation data looks good, I would expect rates to keep dropping temporarily. Now, regarding mortgage purchase applications, as expected, mortgage rates were getting very high, up to 7.11. So last week, we actually saw a 1% decrease in the number of people applying for mortgages, which is actually a surprisingly small drop. And if you remember last week, we actually had, I think it was like a 4.6% increase. So for rates getting as high as they did and seeing only a 1% decrease in demand is how I see it, the number of people applying for mortgages, what it tells me is either People are getting more used to 7% rates, or we're just seeing more seasonal demand come in as people want to make sure that they're moving in the summer while the kids are out of school. But it's obvious rates are still fully in control of this market, and if we were to see rates down near 6% at any point this year, we are going to see a huge wave of demand. You can see it already. Every 0.1% move brings in more or less people applying for mortgages. So a full 1% move, that's going to bring a ton of buyers in. Okay, before we move on to the local market data, if you're considering buying a home in Dallas in 2024, two things. One, I'm now doing a weekly online home buying webinar. This is for anyone considering buying a house in the DFW area in the next year. If that's you, sign up in the link below, or you can also watch an instant replay there. And number two, I've developed a max affordability calculator that will very quickly and easily help you get into the ballpark of how much house should you actually be looking for based on your personal financial situation and today's rates. It'll give you several different options to review, and it takes into account everything all the way down to your income tax bracket. It's completely free for you, so take advantage of it. And if you want to learn more about it, you can watch this video next. Okay, moving on to the local markets, we're starting with the MLS data. Starting with Dallas County, we had 483 listings this week. That's 19 less than last week. 340 closings. That's 70 more than the previous week. Of the homes that closed, 89 were immediate sales, meaning they contracted within the first week. That's 27 more than last week. 407 homes went under contract. That's 31 more than last week. And in total, there are 2,557 homes either under contract or in pending status, and that's 135 more than last week. Now moving on to Collin County, there were 424 new listings. That's 105 more than last week. 254 closings. That's 49 more than last week. 59 were immediate sales. That's one less than last week. 235 homes went under contract. That's 22 more than last week. In total, there are 1,962 homes under contract or in pending status. That's 107 more than last week. So we had more closings, we had more homes going under contract, just showing that the market is heating up, which is totally normal for this time of the year, as well as Collin County actually had an increase in the number of homes listed while Dallas County had a decrease. This is because in Collin County, a lot of the inventory is new construction. So they're literally building inventory so they can continue listing. Whereas in Dallas County, you're going to be at the mercy of whoever wants to list their existing home. Okay, now let's take a look at the Market Action Index. It just takes into account all of this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Anything above that is just how much of a seller's market are we in. Looking at the data here, everything looks totally normal in Dallas County. Median list price is just a slow grind up. That's what happens this time of year. You'll see in the median price of new listings, these fluctuations up and down. Don't worry about those. What we're looking for is a trend. So if you see a sharp move in either direction, don't look at it. We're looking for the trend. It's much more easy to see here in the median list price where there's just a slow grind up. Median days on market is holding steady. Number of homes having price decreases holding steady. Inventory slowly climbing up. Hopefully more people start to list and we can get this number going up even more so you have a lot of homes to choose from and less competition, which will keep prices from shooting up again. But all that we're seeing here is everything is looking totally normal. So let's move on to Collin County. Collin County, similar story. Again, you see a more sharp jump here, but what we're looking for overall is the price is trending upwards. Same with median price of new listings. It shoots up, it shoots down a little, but overall that's trending upwards. Median days on market is lower over here at just 35 and holding steady. Inventory, again, a very slow climb up as we enter the spring market. We want to see that grow even more. Their market action index is a 45, still a strong seller's market, same as Dallas. The one number that we have been following very closely here in Collin County, since it's mostly new construction, is the number of homes having a price increase. Obviously, it sounds weird to know that this week 7.23% of homes in Collin County had a price increase. You don't normally hear of that. That's because it's new construction. And what you'll also notice is we peaked back here in February. This is when all of this time you saw a ton of demand coming in as rates were getting lower. And whatever builders were seeing there on the ground was leading them to increase prices every single week. From here, January 19th at 4%. Remember, this is every week, so 8.4% of homes up to 9.72 in a single week had a price increase. And then, of course, you already know rates started climbing again, so that started to cool off a little, but we are still seeing 7.23% of homes just last week had a price increase. Sometimes this is $1,000, sometimes it's $10,000, but that is a significant number no matter how you look at it. 7% of homes having a price increase in Collin County every week. And I'm telling you, if rates cool off again this week, if the CPI data looks good, I expect that this is going to go right back up to 9% or maybe even higher. There are some suburbs here in a similar situation, new build communities, where you'll see in the city 15% of homes having a price increase in a single week. So again, this is totally dependent on rates. If rates drop again, this is going to go back up. Okay, now let's move on to the top 10 ranked charts. This is the hottest and coolest cities and zip codes in all of Dallas and Collin County that are ranked using that same market action index number. This week, Coppell remains the #1 hottest city. Louisville heats up 2, Grapevine cools off 1, Carrollton cools off 1, Ferris, Texas unbelievably heats up 4. Ferris, Texas was the absolute coolest city in all of Dallas and Collin counties. Just, let's see, back in January, it was a buyer's market. It means it was below a 30 just in January. Now it's gone straight up and is the #5 hottest city. That is absolutely insane. Ferris is a small town straight south of Dallas. A lot of new construction there, and my guess would be there have to be a lot of investors eating up the supply right now to get it looking like this. But Plano cools off 1, Saxe heats up 1, Allen cools off 1, Richardson cools off 3, and Garland remains the #10 on the hottest cities list. Then we like to zoom into specific zip codes. The absolute hottest is Frisco, 75035, followed by Plano, 75023, Dallas, 75287, Garland, 75042, Louisville, 75067, Louisville, 75077, Carrollton, 75006, Carrollton, 75010, Coppell, 75019, and Irving, 75063. So if you live in one of these zip codes, you're going to be getting top dollar for your house. You're going to be in really good shape. Now we're moving on, the exact same thing, but looking for the buyer's markets, the absolute coolest. And the absolute coolest and the only buyer's market this week again remains Van Alstyne at a 28.32. Then Whitewright cools off 1, Blue Ridge cools off 1, Leonard heats up 2, Prosper cools off 4, and look at Prosper's just dropping off. Nevada remains, Seagoville heats up 2, Rowlett cools off 2, Rockwall heats up 2, and Lavon heats up 2 to become the hottest city on the coolest cities list. And if you'll realize, these are already in the 39s. That is quite a bit hotter than below a 30, which would be a buyer's market. So even though they're on the coolest cities list, they're still pretty hot markets. That's it, guys. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching, and I'll see you in the next video.